That was one of the toughest day in the market. Yesterday we did see one bank with connections to crypto going down. Today we see another one going down. Now this one doesn't have that much connection to crypto, and you still see all of this crashing. So most of it is banks, right? You're actually literally observing most of the banks, the financial institutions getting hammered. Now to add on to that pain, we literally got something like this highlighting, okay, it is a security. So that's one. Then we got something in Hydra. Then we got something in Algo Wallet, right? So it's already a bad day. The market is not looking good, and we are getting the bad news hammering things all around. But can we even try to find some positive news and narrative in this market when we are dropping? I'll say it's really hard to look for that, because right now, if you are looking for that and trying to highlight that, people would most likely hammer you. That's going to be the reality, because the market is pushing emotions so hard. That's the truth. So if we actually look at the dollar, we can literally observe that it gapped to the downside and opened to the downside. So it did get some pressure, the selling pressure. And it can literally go back, close the gap, and then still go back down. The pattern here, which we're observing, is an evening star. So we need to actually understand market does give us these kind of ideas before it happens. So if that's true, and we are going to go down here in this, that's the dollar, which is going to be a little bit more of relief in crypto market. But with the current momentum to the downside, it is going to be a lot of pain, right? Fear is bursting through the market. A lot of people are panicking right now. Trades are being taken down. The market is in that level of fear and panic because the entire banking sector is going through this. Now that's the economy. So Fed just came out and gave the narrative of what they're going to do. And right now the market is in a panic. Welcome to the Scientific Investor family, where the normal retail guys learn how to become the next top 10% of this world. We did talk about this, saying this can really become scary and this is going to be volatile. I even put that volatility alert up there, right? And once that's done, we are then looking for the start of next big run. But right now, the market is searching for a bottom. That is going to be one of the hardest part for a lot of us to digest, because right now we are observing the market acting like this, but we forget the fact that the market is still trying to put in a low, right? We are searching for that bottom. But if we really look at it, zooming a little bit out, calming ourselves down to see where we really are, each time we dropped, this is actually really important in my humble opinion, because all of these drops were panic drops because of something happening in the market, and these drops were not small, right? If we actually measured them in percent terms, that was a 25% drop in the market. And here you are, the RSI reached one level. After that, when you're looking at the next level of supports here, this one is 30% drop in the market when the RSI came close to that support. Now do the next one. You're seeing something even better. That's a 40% drop, and the price is still holding on to this level. So the strength was still there. By the time the price reaches a level and the RSI is reaching this support, it tends to be the support range for that local bottom. So now what we're observing is it was 24, then 32, then 40. Fine. Then it reduced to 27. So it was increasing downside, and at one point it reduced. So the trend was slowly starting to reverse, and then we went up putting in a higher high. Now, If we look at the current drop in the price action, that's again close to 20% from the recent top, and the RSI is here. So you can either say we are going to 15K, or you can look at this logically and ask yourself like, okay, what do you think is realistic, right? So if I'm looking at this, I would most likely say yes, it is. I agree. Yes, it is volatile. 100%. It is shaking the market. The emotions are high. The market is volatile. If you go on an hourly chart, you'll see panic, right? We are doing that panic scenario touching 19,930 range. Touching that range, going below that 20,000 is literally a emotional, psychological key level where it's playing with a lot of us. 100%. But when we were holding this range, testing that range, and the RSI showed us that on that time horizon we are breaking lower, I told this, right? Okay, most likely panic selling is coming and we are going to 2500. Now, was I right? Yes, we dropped, but it was not 2500 where we dropped. We went even lower. But what's the key point here? Market is weak. Why is that? It's not just the crypto market, the entire market is weak. And adding on to that, in the crypto market, we are getting bad news, right? Some of these are fundamental strong projects, and Ether as a whole getting hammered in. Now, this is not from the SEC. That's something which we all have to understand. This is actually directly from the New York Attorney General. So the understanding of what they are trying to put in is, for me, I would be like, okay, if an attorney general is actually going against an exchange and highlighting this inside there, I would be like, okay, they would have consulted the SEC, because the Terra Luna issue has already gone through the SEC and they are trying to sue them, right, as a project. So if it's me, I would be like, okay, maybe they already discussed within each other and they're going to screw this. SEC didn't give a clarity whether Ether is a security or not, but indirectly they're screwing. So now you actually go back to the altcoins or Ether for that matter, directly into the Ether to USDT, and it's panic, right? By the time the world 24 hours, everyone observes this, you're going to see the panic materializing in the market, right? So if we actually put on the trend line, this is how it actually looks, which is really painful. If you remember, we talked about that exact scenario, saying if we are getting rejected, now we're going down to 1250. So that's going to be the close range. And if bulls think they are going to hold on, then this is going to be the range which they have to defend. If we get a bounce from here, go back to retest this range, it's all good. But remember, we will have to look for what the interest shows in the indicators. Right now, it's not that good, great, bright thing which we are looking at. We are looking at this trend line as a support, which is breaking to the downside. So on the RSI side of it, on a daily, it doesn't really look good for Ether. That's something which is so easy for us to say. But then we actually have to go back to XRP and see what we are doing. We were trying to break higher. We tested the 200-day moving average on a daily and got rejected with what's happening with the market, what's happening with the Bitcoin. And we are coming back down to test the support. So if we actually look at this logically, 0.36 is one level of support, and that's like, still okay. The market is dropping like crazy on the other side, and if XRP can still hold on to this, that means the market is buying into this. Why is that? And this is some of the possibility out there and the speculation out there. Our final verdict is about to come on and it's going to blast off in price. I'm like, the market sentiment doesn't really look good. One, so if the code is saying, okay, you can't use more of the escrow into the market, so the supply is done, okay, the price may actually go up, but that won't really be like a bombardment of the price when the market sentiment is like this, right? If that's happening at a time when the market is bouncing back up, breaking through the first level or the first hurdle which we'll have to go through is going to be 21,500, and if that's the case, that's okay. That will look good. But now, it's not only this horizontal level which we'll have to look for in the Bitcoin side of it. It'll also be this level. So we'll have a couple of resistance as we go back up. Right now, we're getting close to the 200-day moving average for Bitcoin, which is kind of like, kicking a lot of these assets, and the market is completely volatile. We just came below $1 trillion, which is not great. When Bitcoin dropped 7%, there are assets which are dropping 20% for the day. There are assets which are, now in general, it's more or less close to that 7%, which is actually okay, 7, 8, 9%. But few are getting hammered, and you literally have to look for what these exchanges have in their reserves. If it's Bitcoin, when the price of Bitcoin drops, their reserves are also dropping. So that side of the fundamentals should also be considered. Now, we go back into the side of technicals to actually see like, okay, we are literally observing all of these assets getting hammered, not only crypto, but the entire market, financial markets. Now, one of the only doubt which I have is like, okay, banks are getting screwed right now. And if Fed is going to do another 50 basis point hike, it's going to dry up the liquidity. If you have recently checked the M2 money supply, you would be like, okay, that looks crazy. We are going to the historical lows where we have a economical depression, which is so bad, right? That's a deep recession, right? And if we are going into that area, I'm like, how can Fed really do another 50 basis point hike at this level? If that's the case, that means you're going to literally observe a lot more bankruptcies in banking sector. Then don't even think about the technology. Don't even think about all the other companies out there who are struggling right now with increased cost. So that's the side of the market. Now, we go back into the crypto. We are really interested in looking at what the market is doing right now, because that's scary part of it, right? $20,000 for Bitcoin is a psychological level. Breaking that or even flirting with that level is literally flirting with the danger zone. Now, I'm not saying if we just break below that, we're going all the way down to 15,000. We'll have support close to 19,000, but the issue is 19 to 19,500 is below 20,000, which is again a psychological level on a daily. Now, if we are going back onto the daily and we are just opening up to look at the 200-day moving average, that's here, 19,750. So we can still drop to that level and still be good. Managing that, we are moving to the upside. We had this trend line, we go on the macro and still look good. Now, why is that? Because even when we are dropping down like this and the short-term market volatility is actually panicking most of us, including me, the reality of it is we are slowly trending to the upside. So we just look and connect through these supports, and here we are close to that trend line. So even if we are wicking lower and the panic is hitting our trades, it really does show that whatever you have is going to go through the main run back up. So on a 3-day, the 200-day moving average lies close to this level of 33,000. So if we are going to retest that range, it's going to take some time to get the market sentiment back. Now, we can also have just like this. We panic, we drop, and what happens? We bounce back immediately to the upside. But with what's happening on the other side of the economy, which is this, it may actually take a couple of weeks for the market to calm down first. And then look at the macro and suggest like, okay, the world is not over yet. The markets are still alive and the asset class is still alive. That's for crypto, right? And people would still come back and they'll start buying these assets, understanding how things work in the long run. In the markets, we usually look to average down close to the support, right? But what really happens is when the price actually drop like this, the panic actually enter into that level, which kind of, becomes like, okay, should I really do that? Because the market is dropping heavy. And catching the falling knife is one of the hardest part, whether it's in crypto, whether it's in stock, whether it's in Forex, that is a hard thing. Why? Because it plays with your emotion. Right now, you're coming back to the 200-day moving average on a daily. That is kind of a good level to look for to see whether the price is slowing down. But we do have to see the confirmation on the other end where the dollar is getting slowed down. So it's really going to play out for the next 2 days where we'll get a confirmation whether this is getting invalidated, we're getting a bullish candle to the upside, or this is validating and we are going to the downside. Dollar dropping and the assets denominated in dollar will hand off. But the panic is what we have to move on to. The panic is what we have to overcome right now because Bitcoin is now below $20,000. As we were recording this video, we've already highlighted the importance of 20,000. Now, it is true that the 200-day moving average is here. We're trying to hold that on. But when we go on here to the live market, looking at how things are evolving, there are assets which are still bleeding, but close to what the Bitcoin is doing, right? It's more or less highlighting the fact that this is happening. So in real time, if we actually jump on to look at the Bitcoin dominance, or say, for example, to look for the altcoin market, excluding the Bitcoin, and we'll get the idea that we are going down, which means the Bitcoin dominance is actually going up and we are dropping. Now, what's the key level of support here? The bottom is here. Great. There's the top where we are getting rejected. Now, the mid level of support happens to be here. We got supported there previously. That happens to be a resistance afterwards. Now we extend that. Now we are entering into that range. What we really want to see in the market is that the price slows down there, the downside momentum, and we slowly go back up. Now, whether that test is going to support this level, kick that off, we don't know. But what we are looking for is something like that. If the price managed to break and bounce through this range, it's going to be good. So that's something which we are focusing on for the altcoin market. Because right now, panic is grabbing the market. With Bitcoin below $20,000, it's going to be a lot more pain. But what we want to see is the 24-hour close. Now, that's like we just started the new daily open right now. Maybe 30 minutes, 40 minutes. So from here, getting another 24-hour candle close is going to be literally waiting through this day. And we want what we want to see is a long wick. So we may actually have this volatility, going through all these crazy stuff, but getting closed with a reversal signal. That's what we want to look at. So tomorrow when we are going to do the video, we are going to review this back. We're going to test this stuff and look at how things are going to evolve, because on the other side, remember the BTC USD longs which we were talking about is still in play. We are still inside this. We didn't break this to the upside. If we did break this to the upside, then I would have thought personally, I would have gone to that area saying, okay, that does make sense. Okay, this didn't break to the downside, so we are now going up now. If that broke to the upside, I was like, okay, we're going to go further lower, way lower. But right now, the RSI broke to the downside. It's kind of retesting this range. It's kind of getting rejected right now with what we're observing, which actually suggests me like, okay, last time which pumped like this, that was the panic of Terra Luna. Great. And after which, the recent crisis, if we are looking at the recent bounce, the retest here, that was the FTX issue, right? So when the price in crypto market is dropping, this actually went up, fine. Right now, we are waiting to see this break to the downside. So we'll be looking at this, we'll be following this. Whether we are right or wrong, time will prove what's happening, right? So guys, if you received value for your time, please do hit that like and subscribe button. Stay tight in the market. Don't get emotional. That's going to stress you out. And believe me, if you're going to add on to your margins, if you have trades, if that addition is not really pushing the price below a macro support, don't do it. It doesn't actually help you much. But if you have that dry powder to push it below a macro support, you get the range, the price goes back up, you win. But if not, you put in some more money and that's still a power support and price goes through that range, you lose that too. So understand that, keep that in mind and play this game. Be safe out there. It's volatile. The market is getting crushed. So don't go emotional. So that's it for today, guys. I'll meet you on the next video. Bye bye.